Ready?
Yes.
No. There's no way.
You've got to be kidding me.
No freaking way.
Same price and everything.
I like the way you think.
Man.
Well, that's interesting.
Are we live right now? Okay. I didn't know we're on, but so what just happened, we're sitting down to do a stock battle. We don't plan ahead what stocks we're going to cover. There's thousands and thousands and thousands of options. We both looked at each other's screen. We picked the same. Never before in the history of stock battles has that happened. So now what do? We can't even.
Well, this is more of a stock collaboration.
I guess so,
we
yeah.
might as well do it. We got our notes.
Oh wow, that's crazy. Okay, so we're gonna be tied today.
Tied today, regardless. But
wow,
that's crazy.
Okay, wow, let's kick it off.
We tried, you guys. Yeah, we saw the comments on the last video to bring back the stock battles. So we're like, okay, we'll try it out.
Wow.
It's funny, I thought mine was going to be the controversial one of the video, and I thought I would kick it off.
Well, my first note, controversial.
Well, there you go.
Okay, well, we're going to talk about a controversial company. I don't know how we're going to do this, but maybe sort of kick off with your notes, and I will add as we go along.
Why don't we collaborate?
So what we're going to do is it's not a battle, it's a collaboration on this company. Oh, man. Okay, that's controversial.
Our company today
Wow.
is Lockheed Martin, ticker LMT, and I know some people aren't going to like this one.
Yeah, a lot of people don't like this because of the war affiliation. Yeah,
of course, and fairly so. And like as we always say, we're trying to give an array of ideas and suggestions to do more research into. Not every stock is for every single person, right?
Yeah, for sure. And this isn't necessarily a company that
we personally endorse. Like we're huge advocates, but it's more
this
of
is
an
a battle.
opportunity.
It's supposed to be a battle, right? Which company will do best over the next year or so?
Well, let's start with that. Let's look at the performance, Dad. Why did we come to this selection?
Mm-hmm.
Hey, I was looking over the past decade. This has been a steady performer. I used to own this stock. It's been on my watch list forever. And I was just looking as of recent. It spiked up to about $615 per share. I think it was $614 technically.
Yeah, pulled back.
It has pulled back about 23% off highs, right toward that longer-term support range. I thought it was definitely in the range where it's worth taking a look at.
I think so as well. I think that it's funny because I don't know what your notes say, but my notes are going to get to valuation.
Yeah.
And I don't think the valuation is striking right now, but there's a lot of other reasons that I like the company. So we'll get to that.
Exactly. Well, let's start with that and let's compare. Sure. One of the metrics that jump out to me, I was looking at their PE ratio, Dad. Classic. PE ratio sitting at about 16.77.
Right.
Now, this number 16 times, or 16.77, I was looking back, and this is trading at about 15% below its historical averages, at about 19-20 times earnings. Does that compare up to what you have?
It doesn't. Now, I was looking specifically at a 10-year time window and looking at the mean. So I was showing the mean at 16.1 over that 10-year time period. So my note was this. You'll see on my screen here, Brandon. At this point, this was how I was going to conclude my presentation. And assuming that I was beating you already, I had here a note. I was just going to give you some hope and just say that the company is trading, I'm going to say at the historic mean of value there. So it's not undervalued like I normally try and focus on companies that are undervalued. So, yeah.
I thought the way I look at it is a very fairly valued range. Yeah.
Exactly. Fairly valued, not screaming by undervalued, and I don't think it's overvalued as well.
Well, another thing, I don't know if you were going to dive into the quarterly results. You do have your, you can go for it. Basically, it wasn't a stellar quarter by any measure.
Yeah, there were some positive notes that came out of it. I'm looking at Q3 2024. That's the most recent report. They are releasing earnings again a little bit later this month, probably in a couple of weeks or so, but the most recent available. I looked at the Q3 results, and I just thought there was reasonable operational execution there. Shareholder returns is something that really jumped out to me. I want to talk a little bit about that. I did note the geopolitical tailwinds, and then there's sustained demand for their product, which is good. And then they also did raise guidance moderately. I mean, just slightly in certain categories, so nothing that screamed at me there. But one of the things, I'll just talk about it, that did jump out at me is the backlog growth. And any entity like this, I mean, all companies want to have that runway ahead of them. So they reported record backlog, $166 billion in unfulfilled orders by the end of 2020, or the Q3 2024. So to me, that just sort of highlights the long-term viability of the company. There was strong demand across all business segments as well. So that was something that I I did note. Is that something that you had in your
It
notes
was.
as well?
I had why I like the stock, and the backlog is always something. It indicates the strong demand for the product. One of the things I was looking into in the recent quarter was, I guess I don't want to say issues, but delays with their F-35 planes. Revenue grew 1%, so nothing against stellar. When I think long term with this stock, right? I think you have like pushing and pulling forces in general, and I'm a believer that long term, defense spending is something that's going to continue. I think about where we are in our world and where we're heading.
Sadly, not going anywhere.
Yeah, it's if anything, the possibility for things to worsen. When you think about what's going on with the various wars across the world, places like China, you never know, right? I would say, in fairness, one of the articles I came across was I don't know if you saw this, Dad. Elon Musk calling the program, the F-35 program, obsolete.
Oh, okay.
So you have someone in Trump's ear basically going and saying these self-driving, human-driven planes, human-flown planes is a silly, silly thing, and they should all be drone automated.
Unmanned,
I mean, I think they do say a lot of things. And then the reason I bring that up is then you look at the backlog and you look at just the demand for, like you said, within the aerospace, within all divisions of the business, a growing backlog, which is at the end of the day, I mean, these are orders to be placed. This is money to be filled. I look at the numbers and it's just long term. I think it's a very settling number to look at, the backlog.
Comfortable as an investor. Now, just dawned on me, Brandon. We didn't know. There may be some people watching who have never thought of LMT, Lockheed Martin.
True.
So I wanted to take just a minute or two and just sort of go through. So the company itself operates with four main business segments. You got aeronautics, you got the space division, their rotary and mission systems, and then, of course, missiles and fire controls. So the largest segment is the aeronautics. The revenue there was $27 billion. That's in the fiscal year. That segment focuses on the design, manufacture of advanced military aircraft. Now, some of the names you've probably heard in the news, the F-35, the Lightning II, and then also the Super Hercules aircraft. So these are some of the bigger products that you might know the name. There's obviously a lot of depth beneath that as well. Second largest segment is the Rotary and Missions Systems, RMS. So this delivers technologies across what they call rotorcrafts. I think helicopters, there's a technical difference there. They also delve into sensors, radar systems, command and control, combat simulation, and training. Some projects there. Everybody's probably heard of the Sikorsky Black Hawk helicopter.
Black Hawk Down, yeah.
Classic. Down. That's kind of what you hear all the time. They do about $12.6 billion in revenue in space. So in these segments here, they talk about satellites. That's something you wouldn't necessarily think of LMT involved in space exploration vehicles, other technologies as well. They have the Orion spacecraft for NASA. You may have heard of that. GPS satellites. They're big into that space there. They also produce for various classified missions. Now, I know what those are, but I can't tell you.
Yeah.
Especially on a public video like this. So we'll keep that under wraps, but just say classified missions there. Then, finally, missiles and fire control. And this is also, you hear of things like tactical missiles, the Patriot missiles, Javelin missiles. These fall into that category as well. So that's kind of what the company does, for those of you who might not be fully up to speed on that.
And I think it's important you mention that, because that ties into, when I was diving through my research, especially with all of the political madness going on right now, and I guess the shorter term factors at play, when you go through that diverse business model, Dad, we're not picking stocks for the stock battle for what's going to perform well over the next 3 months or next 6 months. The concept here is that we're thinking, if you're a long-term investor and you're thinking about a good position to own in your portfolio for the foreseeable future, let's call it 10 years, this may be a consideration among the other ones. And when you think about how diverse that business model is, obviously certain aspects play with government contracts, certain aspects play with, more nuanced, but you just spend a minute going through all of the various fields they play in, if you will.
Yeah, so there is that long-term, and that's typically the types of companies that we buy. For the purposes of our battle, we measure a year just to see.
Yes.
We have to determine a winner and a loser, because there's no point in having a battle without a winner and a loser. Although it is 2025 now, so maybe you just have a participation ribbon. Who knows there? But yeah.
Well, let's talk about the dividend. This is what I would consider a very reliable dividend payer stock, Dad.
Yeah.
And what I'm looking at on my data here is a 2.82% yield. Payout ratio I have highlighted, shy of less than 50%, 46.8. And yeah, I always like looking at these, I guess, historical dividend yields and use it as almost like an inverse indicator, right? An inverse indicator. Of course, when the share price is coming down, you're going to see that yield coming up, and vice versa. We started off this video saying the shares have retraced about 23% off highs, and we're not at like record high yields. Up at the 3% quite yet, but we're inching up there, right? This is a company that I would consider a dividend growth stock. It's not aggressively growing it, like in the double digits in terms of their compounding. I'm seeing here a 10-year compound annual growth rate of 8.2%. Has come down a little bit over the shorter term, 3 years, 5.63%. But this is a company that's been increasing dividends in and of itself for 23 years.
Yeah.
A 23-year history.
22 now, 23.
Yeah, this will be the 20, exactly.
I noted here Q3, they raised it by 5%.
Yeah.
There. Now, another thing on this topic, and this could have been the deciding factor in who would have won this. I'm not sure if you mentioned this, but I wanted to talk about the share repurchase program, which is pretty strong with Lockheed. And they just authorized another $3 billion added to the program. So the total there is $10.3 billion now. So when I looked at the numbers here, I take the dividend yield, I take the buybacks, and that comes off to a 6.24% shareholder yield.
Yeah.
So that's a number that, you look at each of those independent of another, you can sort of marry those as that shareholder yield. And I'll throw up a chart here, or you can throw up a chart if you're doing this, Brandon. That's pretty consistent back to 2017 where you see that in there. So that's a nice number if you're a dividend, or if you're looking at it for shareholder return on that.
Well, you use the word consistent there. And this is a company for me that, hey, at least as long as that's been on my radar, on my watch list, it's been a consistent one. It's been a consistent growth driver. And it's been a consistent dividend payer. Again, I genuinely believe it's in an area of the economy that has consistent attention being devoted to it. And I mean, regardless of your political preferences and whatnot, I think it's hard to argue that, having some exposure to this space, is as a long-term hold, is something.
This is going to be a dilemma for the voters, because usually I'm not going to vote for Brandon because this company. I cannot vote for a tobacco company or a weapons company, or vice versa, depending. So we're going to feel the wrath together on this one.
That's so true.
Well, I did have a note here on free cash flow, because I think that's important. Again, that comes from the Q3 earnings. They reported $2.1 billion in free cash flow. They raised their guidance for 2024 to $6.2 billion. You can see on this chart here, 6.23, the actual numbers right now. And why I wanted to include this is it gives me comfort. It will fund dividends for that share buyback program, and for any expansion, any growth agenda that they have as well, some initiatives there. They're well funded. So that's obviously important if you're going to be buying a company at any point in time, right? We talked earlier about the guidance, right? So a couple of key points here. They raised their full year 2024 guidance, $71.25 billion in revenue. And you can see here the earnings per share, we're up a little bit to 26.65. So again, that shows that they have confidence. That's not surprising. That's what they're going to put. But it also gives me confidence there. And lastly, the price target. This is not something that you can take to the bank, obviously, but when you look at the average of Wall Street, what they're predicting out there, average right now is $576 and change. As you mentioned, it's trading around $467-ish right now. These are all US dollars. So there's about, I see a 23% upside when you look at it strictly from those numbers there. So my conclusion to win this battle was, you see that combination of the strong financial performance, expanding global opportunities. We didn't really talk about this, but clearly the wars and the battles out there aren't just here. And when I say wars, the need for defense as well, it's really important, because that's kind of how the company positions it here. That record backlog and the improved guidance is like a strong contender. So, yeah.
And they're going to need they're going to start getting a bunch of military planes and whatnot to defend Canada soon enough.
You're right. We're going to be buying a whole bunch of these military aircraft and defense systems so we can protect ourselves against the United States, or we just.
I was thinking the other way around.
Put up the white flag.
And
just become a 51st state. So what a gong show that is. Anyway, we're off the topic. We're getting political, and when you and I talk politics, this video
gets ugly. It gets ugly.
Yeah, it gets ugly. So good.
Hey,
this is weird.
Weird one. Definitely felt weird too. The whole flow was off. But hey, I hope you guys like the stocks. Let us know. Place your votes below. Did you guys like my pick, Mark's pick? Maybe I guess the better one is, does our pick, is it a winner today or is it a loser in general?
Correct. Is it a stock? I don't even know how to classify it. This will never happen again. I'm sure the odds of this are so small But hey, at least we identified a company that we both felt had some potential.
like
As
the way
always,
you
though, this
think.
is not a recommendation to go out and buy it. It's a recommendation to maybe pay attention to it, have a look at it, do your
Throw it
own
on your watch
research,
list, do
as
your own
always.
research. Exactly.
All right, Brandon, I guess we should wrap it up.
Well, hey, interesting way to start off the year with the stock battle, but
Yeah.
if you guys enjoyed, give it a thumbs up. Hey, let us know your comments down below. And as always, we'll see you in the next video.